Welcome to TheStreet.com TV. I'm Aaron Task here with Stuart Hoffman. He is Chief Economist for PNC Financial Services. Stuart, thanks for being here.
Glad to be here.
So obviously there was a lot of concern last week after the retail sales stores and chain stores data came out and people worried that the consumer's going over the cliff and we're heading to recession. Where do you come down on the debate about where the economy is right now?
Yeah, the consumer's not going over the cliff or they haven't hit a wall, all those phrases. They are slowing down a bit. We had 2 strong quarters of consumer spending. But with gasoline prices at record highs and seem like going up higher every week, home prices and the housing market probably going to fall deeper because of the subprime problems, and probably less job growth. We got a hint of that. The April numbers on jobs weren't as strong. I mean, that should take a little bit of the wind out of the sails of the consumers,
sure,
but not hitting the wall.
Right, okay, understandable. And also the trade deficit data last week got a lot of economists, ratcheting down their first quarter GDP numbers after an already soft number. It doesn't sound like you think we're heading towards a recession, though.
No, I'm still in the soft landing camp. The first quarter probably will be revised down for GDP, although the retail sales numbers, the March numbers, the revisions actually mean the first quarter will be a little stronger. But no, I think the economy is going to hang in there, maybe a little more by its fingertips than I might have thought of before, but I don't think the consumer or the housing market is going to drive the economy down, but it is going to temper the rate of growth, and to me, that means we're going to have a little less inflation down the road, and maybe the Fed will be a little happier.
So, taking that at face value, did the Fed do the right thing last week by leaving rates unchanged and maintaining a tightening bias, formally at least?
Yeah, I think they did. As long as the year-over-year inflation numbers are, the core number they watch is still above 2%, they probably want to say their predominant concern is inflation. But in terms of not raising the rate, leaving it alone, and I think they'll probably do that a couple more meetings in June and August. But I think the next move will be to go to a balance between their concerns, no more concerned about inflation than slower economic growth. And then that means, in my opinion, they cut the rate maybe once, twice before the end of the year.
Okay, and I would think a lot of the people on Wall Street would be happy to hear that outlook. But we've had a great rally here without a Fed rate cut for nearly a year now. The Fed's been on hold. What kind of environment do you foresee going forward for equities, broadly speaking?
We still like equities. We're still overweight. We, meaning PNC, and our investment philosophy has been overweight equities. Within that, overweight international equities. And within the domestic side, we like large cap and some of the growth stocks. We think multiples can go up a little bit. Earnings were pretty good in the first quarter with an assist from a weaker dollar and those international. So we think we can get a bit of a multiple expansion. And so we still like equities. Fixed incomes look pretty quiet, although if the Fed does ease in the final months of the year, you might see a 10-year move towards 4.5%. But we think the equities beat treasuries and beat cash, and we don't like the spread, so we're not taking on a lot of equity market risk.
Okay, can you talk specific stocks? You said you like large caps and growth stocks. Can you talk specific names?
I don't follow as many specific names. We do like some of the ones like a McDonald's or a Coke that have a little bit of an international. We're sort of not as excited about some of the retailers, particularly maybe a Walmart that has a bit more of a middle to lower income that's going to be hardest hit by the gasoline, perhaps some of the subprime market. So I'm not so much an individual stock guru rather than saying the sectors we like and some of the caps that we like.
Sure, and of course you have analysts and money managers who do that work. That's what they do all day. And before we go, tomorrow we get the CPI report, also Ben Bernanke speaking. People were pleased with the PPI number on Friday, but the CPI number is much more important for the Fed, is it not?
Much more. We won't get a 0 on the core CPI just because of services and
no
rent
one would believe
and
it if we did. Yeah.
You're right. They want to recount.
Right.
But my guess is we'll get 0.2 on the core. If we got 0.3, they round these numbers now, and if they round it up to 3, may hurt a little. But if this number is 0.1 for the second month in a row, that's going to be great for the stock and the bond market. That's the kind of thing that puts some real fire to the stock market. So 0.3 isn't a problem. I think 0.2, the headline number is going to be another 5 or 6 tenths because of gasoline and food prices. And then later in the week, we probably get a small increase in industrial production. I don't think there's anything that Chairman Bernanke or anyone at the Fed is going to say different from what they've saying. We're going to be concerned about inflation until we see it under 2%.
All right, Stuart, thanks very much.
Thank you.
My guest has been Stuart Hoffman. He's Chief Economist at PNC Financial Services. I'm Aaron Task. Stay tuned for more of TheStreet.com TV.